So the question from Vinay is, how high is high IV? And how do you know whether or not you should trade and etc.? Right? Did I get that correct, Vinay?
Yeah, and if you wanted to trade in high IV, because
Yeah.
of obviously the premium for us are good, what is the best method? Is it vertical or what?
Okay. So IV is high because there is an increased uncertainty. Clear, everyone?
Yep.
So when you think about increased uncertainty, that means there is an increased risk. So there is no free lunch. Even though the premium may be high, this simply means that the risk has increased. So keep that chain of thoughts absolutely clear. High premium, high uncertainty, high risk. Great. So how can you minimize your risk? That's the first question. You can minimize your risk via trading vertical spreads. So if you want to trade high IV, one of the best and less risky way is to trade it via vertical spreads. First thing. The second thing is how high will be considered high. It is subjective. It is depending upon how long do you want to go into the past. For example, if you look at 1 year between now and last year, it may be okay. It may not be very high because we were just coming through the COVID's crash and VIX rallied so high. So if you would look at from a percentile basis, you will find, hey, the VIX is not very high from a percentile, it looks very low. Why? Because of course, in last 1 year, we experienced the COVID crash. But if you go back to the levels before that, you will find the current levels to be elevated. In fact, before subprime crisis, VIX used to be in teens, like 10, 11. In fact, even single digits, I've traded VIX. Okay. So you can use some benchmark by saying if it's below 20 VIX, if the VIX is below 20, then you can say it's low IV. If it's above 20, then you can say it's high IV. But then again, you have to keep the perspective in mind. And that perspective is in last 1 year, what sort of events have taken place? If it was a cool and calm period, it will be smooth. But otherwise, you will see huge peaks of volatility. So what would be considered high? I would say about 20 VIX will be considered high VIX. And if you were to trade high VIX, when will VIX be high? Typically when the markets have crashed, right? So everybody keep that in mind. I'm, like pulling the curtains, if I were to use that term, to show you exactly and explain to you exactly the concept if you were to trade implied volatility. So high IV is increased risk and you trade it via verticals. And high IV will be, with regards to the context, what has happened in last 1 year. Then when you were to trade, you have to keep in mind vols will be high because markets have pulled back. So when markets have pulled back, one of the best strategy will be to go for bull put spreads.